We've been talking about the insurers today, obviously, with both QBE and IAG releasing some results. What did you make of IAG in particular? Because it seems to be doing a lot better, up 0.5% right now.
Ingrid, it does look like it's having a very strong performance today, but of course that's off the back of this very strong result that's come through. So we've certainly seen another good year for IAG, and actually some of those numbers that have come through are ahead of forecasts. And really there's been no surprises given the fact that a lot of this was flagged back at their July update. Those net profits up 59% to $1.23 billion. This was ahead of consensus of $1.18 billion. Their full year dividend was up 8.3% to about 39 cents. Again, this was ahead of consensus of 35 cents. Their gross written premiums were up 3%, and also their reported insurance margins came in at 18.3%, as you said, at the top end of their guidance range. So really, if you have a look at those numbers, they do look very strong, and certainly that is driving that share price today. But looking at their outlook, it also remains very positive. They're expecting to see some strong insurance margins to continue coming through, targeting between 13.5% to 15.5%. They're expecting those gross written premiums to grow by about 17 to 20%, and they're also expecting those synergies to start flowing through from the recent acquisition of that Wesfarmers insurance business. So overall, it is all certainly looking very positive, and we actually do very much like the outlook for IAG. In fact, after their trading update in July, we actually did run through our numbers, and we actually increased our medium-term earnings by about 2% as a result of some lower claims costs coming through and a better investment outlook as well for the company. So we actually very much like the outlook for the stock, and certainly the strong result today has confirmed our view.
Leanne, one of the best performers today, GWA Group. It's up over 5% on its result. Really the home building boom playing into this one.
That's exactly right, Ingrid. And if we have a look at some of those numbers, it does look like they've come in fairly in line with company guidance. But again, it looks like the outlook commentary is what's driving this stock today, up about 5.6%. Looking at what they've sort of said, their strategic review actually has recently been completed, and that's actually seen the company exiting that Bribus heating and cooling business, as well as the Dux water heating business. And of course, this is all looking like it may potentially result in some capital returns to shareholders. So I think that's certainly providing a bit of optimism for investors today. But they're also very optimistic on the outlook for not only the market but also the business in terms of some of their growth opportunities. And of course, some of those higher sales and profits will potentially start to flow through. Again, we actually very much like the outlook for this stock as well, particularly given that it is highly leveraged to this housing construction market. We know that some of these dwelling commencements are running at 3-year highs at the moment, and it is a little bit skewed towards apartments, which typically are less materials intensive and take a little bit longer to complete. So we actually do like stocks in this sector that are more highly leveraged to that completion cycle, such as GWA Group. So we actually do think that some of those earnings for GWA will start to flow through in around sort of FY15 to FY16 in terms of that completion cycle. It's been a little bit of an underperformer in terms of some of its peers in the sector, but we actually do think this trend will start to turn around long term. So we very much like the outlook once again.
Leanne, just looking at Monadelphous as well, another one we're watching today that's just shy of 6% higher right now. I guess the question here is, can the rally actually last?
Ingrid, we're certainly seeing a very strong rally today, and of course we know that Monadelphous has been under a little bit of pressure since the start of the year. It's actually down about 12%, but we know that the sector in general has been coming under pressure. But we're certainly seeing that rally today. Of course, some of those results have come through a little better than expected. Those reported net profits and their earnings both ahead of forecasts. Their sales revenues fairly in line with forecasts, but it's also in terms of those cost reductions of about $52 million, which really helped in terms of some of those margins. So that result actually was a little better than expected, and particularly in terms of their outlook as well. I think it probably wasn't quite as bad as some analysts and investors were expecting, but I think in the short term we're certainly seeing this rally today potentially could be a bit of a short covering rally. But I do think long term we probably need to be a little bit cautious on this stock, particularly given the sector that they are running in. We do expect that the shortage of work across the sector will result in some increasing competition, particularly for some of those contracts. And of course, that's likely to start putting downward pressure on margins, and of course our cost pressures coming from customers as well. So we do actually think Monadelphous is probably going to have to likely to increase their cost reduction from the current target of about $60 million or so. So looking at the outlook, we have actually recently downgraded to a hold on the stock as a result of some of that deterioration in that new project pipeline, some pressure on those margins, and of course the company potentially having to increase that cost reduction program, as I've mentioned. So I certainly think long term we probably need to be a little bit cautious on this one, despite the significant rally we're seeing today.